Mr. AP Hota is the Managing Director and CEO of the National Payment Corporation of India, the organization that is building an ubiquitous payments infrastructure for the country with a clear objective of reaching the unbanked in this country. Mr. Hota, could you give us a quick sense of what are the 2 or 3 most important initiatives in the National Payment Corporations today?
This organization has been set up out of a vision of Reserve Bank of India to be the umbrella organization for all retail payment systems in the country. It covers check clearing, electronic money transfer, ACH, this automated clearing house, card payment system, ATM switching, POS switching, so whole lot of payment systems other than RTGS would in due course of time be with NPCI, and NPCI would be the central infrastructure for interbank settlement. So as a part of that, we have done a number of things. First thing is Reserve Banks gave us previously the ATM switching infrastructure, which Reserve Bank was doing with its own technology outfit called IDRBT. They handed over the services to us, right, and asked us to grow. And we took up, when we took up, there were 37 member banks with some 2 million transactions. Yeah. Now it has grown to 55 banks, member banks, with 76,000 ATMs in the country, with about 5.5 million transactions a day. So we are now the central infrastructure for all ATM transactions in the country. Right. Then second, we have been asked to do the interbank mobile payment systems. Reserve Bank came out with the mobile payment guidelines, asked member banks to offer mobile payment services. Banks initially did it for customers within the bank, and when NPCI came up, now NPCI took the responsibility of taking up interbank transactions. Now a customer of one bank can do the money transfer to the customer of another bank on a 24/7 basis on a real time. So you can say bringing RTGS system in the retail sector. Even the common man can get the benefit of RTGS.
Okay. Two clarifying questions. So is the National Payment Corporation, is that a for-profit initiative? Or
it is a not-for-profit company. Yes, it is means the members have given the capital. 10 large banks have given the initial funding, right, for this company to come up, right, and obviously it is since it is not for profit, the dividend cannot be paid. So whatever money that they have given, it is given because they stand to gain on a long-term basis. Right. If the country has a very efficient payment system, the transaction cost for the banks would be low, and they stand to gain.
Right. So, and what are some of the RBI's operating mandates? For example, what can you do to pass on some of the costs to customers, or is all the costs absorbed by the participating member institutions?
No. In fact, we banks have given the money so that we create the platform, means capital expenditure. Platform, yeah. For their day-to-day running of the various services, we do levy a service charge, and that service charge is good enough for our day-to-day expenses. Right. So we leave means the organization has sources of revenue, and for the revenue expenditure.
Give us a sense of what now has happened to some of the initial initiatives to create bank-owned consortiums. I think there were a couple of consortiums before the National Payment Corporation came into being, and those consortiums, although they were run on the cost side of the bank, they were for-profit, and they were also very innovative in that sense. So where do you think India is heading in terms of a business-driven initiative versus a infrastructure like the National Payment Corporation, and where innovation comes in, and how
I do not think they are in conflict, but there are certain services where the banks have already come together, like a check clearing house. There is no need for two clearing houses in a city, or for a national level clearing house. Creating two clearing houses or two clearing systems does not make sense. Having a single clearing system, interbank clearing system for retail payment systems can provide scale of operation, and the cost of servicing would be low. But in cases, as you said, before NPCI was set up, for instance, the ATM switching, even before NPCI was set up, there were 4 such ATM switching entities, and they still continue. But over a period of time, banks find a value in coming together for really a larger infrastructure. So now almost 80 to 85% of interbank ATM transactions now move through NPCI. And other entities are examining as to whether they should continue, or they should really innovate and provide the services which NPCI cannot provide, like ATM driving. Our role is not for driving the ATMs of individual banks, unless small banks like cooperative banks, they want us to really do something for them. We don't intend to really go into an area where there is already competition, and where it is system is managed reasonably well. So Reserve Bank is really quite, they will not also like us to really go into that area which is already being managed very well.
What is your opinion of the China UnionPay model, and do you think that you're heading in that direction?
I do not think that is the right model for this country, because China UnionPay model, as I understand, is a highly mandated and highly dictated methodology. In India, I do not think the regulatory regime is like that. So should now that we are now building infrastructure, technology infrastructure, once the technology infrastructure is ready, we'll go to the Reserve Bank of India and say that we are now ready for routing the POS transactions, please. So even if the card belongs to MasterCard and Visa, let them be routed through us. All the domestic transactions, let it come through this infrastructure. So the hints that we get is Reserve Bank would facilitate the process, but Reserve Bank will not mandate it to the member banks. We will have to bring value proposition, superior value proposition, which would make the banks to surround the transactions through us.
Right. How would you describe your relationship with MasterCard and Visa as a result?
One thing is true. If we, because we are also planning to come out with a card of our own, called, we have already given a name to that, called Rupay, Rupee payment, Rupay. And we have already made a beginning by some banks issuing Rupay ATM cards, because currently we have the reach to all the ATMs in the country, but we don't have reach in terms of acceptance so far as the POS infrastructure is concerned. We are building the infrastructure at the moment. Once we have also a reach in so far as the POS infrastructure is concerned, we'll really go for that. But even if the Rupay card comes up for international acceptance, it would be a big challenge for us. We are looking at the feasibility of working with all the international schemes like MasterCard, Visa, Discover, JCB, China UnionPay. We are exploring what should be our strategy. We have not finalized as yet, but one thing is clear: we have to collaborate with the international card schemes so far as the international acceptance is concerned. One funny thing in India is, even if a person does not does not think of going abroad at any point of time during in the next 10-15 years, he would like to have an international debit cards. And banks also they give international debit cards to each and every customer without the customer asking for the same. Because think that issuing a domestic only card or issuing an internationally accepted card, the additional cost is just marginal. So they are issuing. So if NPCI comes out with the Rupay card which is accepted only domestically, only in the country, it will not be accepted by banks.
But don't you see the NPCI's role as being international as well? I mean, do you see a role for you going international?
The work that needs to be done within the country is so much. I suppose even if in next 5 years we do nothing for international acceptance, our hands should be full. In fact, we have several things to do, and one of the big thing is the financial inclusion, whatever supportive role that NPCI can do.
Okay. Thank you very much, Mr. Hota.